If you're new, welcome. This is the fourth workshop. We had three other workshops previously, and we focused on the stock market. And most importantly, I wanted people to identify the investment style, if their risk appetite, and what they wanted to gain out of the market. And now I'm going to talk about cryptocurrency, which is the newest asset play on the market right now. There's a lot of questions about cryptocurrency, lots of confusion. Some people ask if it's a scam, if it's legit, if you can actually buy anything with cryptocurrency. So that's going to be the focus of the presentation today. I want to thank Afropolitain for sharing their platform with you all to bring forth this type of knowledge week after week and for free. I have to I have to point out that a lot of the information shared, people actually pay for this stuff. And so to be able to gain this knowledge and apply it to your life to better your finances, better the type of life that you want to create is truly a blessing. And if ever you weren't here in the past workshops, you can go on their website to view them because they were recorded and they're now on their their website. So we're going to get into crypto now. Before I get started, I have to do my disclaimer. The contents in this presentation are for informational and entertainment purposes only and do not constitute financial, accounting, or legal advice. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments. I am not a fiduciary by virtue. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information in this presentation before making any decision based on such information. You agree not to hold me liable for any possible claim for damages arising from any decision you make based on this presentation. So let's get started. All right. So I first want to touch on the big question of what is Bitcoin. I do believe that once you understand what Bitcoin is, it's going to make much more sense to you, and it'll be easier for you to identify if it's truly a scam or if it's legit. And it's legit, but I'm going to explain to you what it is. So Bitcoin was created in 2009. Bitcoin is a digital currency that was created by Satoshi Nakamoto. The actual identity of the person that created the system is anonymous. So their true identity remains a mystery, but they've given it the name Satoshi Nakamoto. And fun fact, in Japanese, Satoshi Nakamoto means central intelligence. So it is part of a decentralized system. A decentralized system basically means that not one person has control of the system. It is peer-to-peer and the control is shared amongst all, versus a centralized system like banks, where the primary decisions are made by a small group at the top of the organization. Why was Bitcoin created? So you may remember in 2008, 2009, there was the global financial crisis that left many people around the world without a job, without homes, and banks were clearly affected as well. A lot of them filed bankruptcy, a lot of businesses went out of business. However, for the majority of the banks, they were bailed out by the government. And so that created a sense of frustration for a lot of people like you and me. It created a lot of frustration that while so many were out there with nothing left and having to build from scratch, the institution who weren't as transparent with their transactions were bailed out by the government. And so Bitcoin was created as a reaction to that. Satoshi created a system removing financial institutions from financial transactions. And so it is a peer-to-peer system. There are no third-party confirmation and the banks are not involved in the transaction. It is truly between people like you and me to the next person. Another example I could give of how sometimes the banks infringe in the way that we want to build our wealth is I don't know if you guys are aware of the GameStop phenomenon that happened earlier this year. There was GameStop, there was the AMC stock as well. It was pushed by a movement called Wall Street Bets. And basically, what it is that people like regular folks like you and me decided together as a large group to pump a stock, which was GameStop. And once they did that, the retail, the whales, so the big financial institution caught on, but a lot of people were able to continue to buy the stock, but the banks would stop you from selling the stock afterwards. And so they still have a control on how to deal with the money that you have. And so this system, this Bitcoin system, what they're doing is that they're removing all power from these financial institutions and they're really giving it back to you and I to build wealth. So how does it work? Bitcoin works by mining. So it is the process where people use their computers to process and validate transactions on a blockchain. A blockchain, if I can explain that briefly, is basically like a ledger. It's a ledger where all transactions are recorded. And so the Bitcoin miners, what they do is that they solve a mathematical problem. They confirm the legitimacy of a transaction, and that system is called proof of work. So you have to prove that you solve this equation. When you prove that you solve that equation, you get rewarded with a Bitcoin. So in 2009, the price of the reward for when someone would solve that equation was 50 Bitcoins. And so you can only imagine the value of 50 Bitcoins today. But at the time, it was 50 Bitcoins. And every 4 years, there's a process that's called halving. Halving is spelled Halving. And so halving means that every 4 years, they cut those rewards in half. Okay. And so the first time they were paid 50 Bitcoins, 4 years later, they were paid 25 Bitcoins, then it was 12.5. And the last halving was last year. It was last May, and they were paid 6.25 Bitcoins per block. And so I'm going to explain to you how halving is important with the cycle of Bitcoin. I'll explain that to you in a few slides, but this is just to explain how does Bitcoin work. Yeah, so when a block is filled up with transactions, the miners that process and confirm the transactions are rewarded with Bitcoin. Blockchain ensures transparency as the data entered cannot be modified or deleted. So once you enter a transaction into a blockchain, you cannot amend it, you cannot delete it. It is absolutely irreversible. What that does is that it creates a system that's completely transparent. You know exactly what you're doing, you know exactly what you're getting. And so this means that the transactions are permanently recorded and viewable to anyone, which again is not the case with, it's not the case often with centralized institutions where you may not be fully aware of what really is going on behind the scene, right? And so with this system, they're trying to make sure that everyone has access to it and everyone knows exactly what they're getting. So as it is a currency, I thought it would be important to draw a comparison with fiat currency and digital currencies. So fiat currencies are, or fiat money is government issued money. So the Americans use the USD, in Canada we use CAD, in Europe they use their euro, right? The value of fiat money is derived from the relationship between supply and demand, but also the stability of the issuing government. So it's backed entirely by the faith and trust that you have in the government. So in countries like ours, in Canada, we don't really question these things, but there are other countries in the world where the government can be corrupted or the government is not as stable as the ones here. And so what happens with their fiat money is that it is often devalued because of that. It's a bit more volatile. And often what these countries do is that they use the USD, they use the US dollar. Sometimes when you travel in other parts of the world, they will accept American money, right? So that explains the value of their own native currency. Fiat money gives central banks greater control over the economy because they can control how much money is printed, and that affects the inflation. A currency tied to gold, for example, is generally more stable than fiat money because of the limited supply of gold. The more something is scarce, the higher the value of it, the more its value increases. And following the global financial crisis of 2008, the beliefs in banks were tempered. So digital currencies, on the other hand, they're a form of currency that is only available in electronic form. And so they're only accessible in computers and mobile phones. All cryptocurrencies are digital currencies, but not all digital currencies are crypto. So for example, if the central bank of a country issues a digital currency like Americans are trying to do, England is trying to do, Sweden is looking into, it's called the central bank digital currency. And finally, digital currency can be used to purchase goods as well as to pay for services, though they can also find restricted use among certain online communities like gaming sites, gambling portals, and social network. I want to point out that earlier this month, El Salvador made Bitcoin legal tender. It is the first country in the world to do so. And what that means is that this cryptocurrency can be used for any transaction where the business can accept it. Fun fact, the US dollar continues to be El Salvador's primary currency. So it's kind of like what I was saying before. The native fiat money of a country sometimes is devalued compared to the US dollar. And what that does to the people that live there is that not everybody has access to use the USD, not because it's much more expensive, because it's so much more higher. And so the fact that El Salvador is saying, you don't have to use fiat money, whether it's the one from El Salvador or the American one. You can now use Bitcoin is absolutely a game changer. I also hear that Paraguay is looking to make Bitcoin a legal tender as well. So to explain more about Bitcoin and how it works, the supply of Bitcoin has been capped to 21 million. The current supply of Bitcoin is around 18 million. And like I mentioned earlier, before, I was saying the more something is scarce, the more it drives the value higher. And that's what's happening with Bitcoin. The last Bitcoin to be mined is scheduled around the year 2140, which means that you have plenty of time to get into Bitcoin. But the other cool thing about Bitcoin, and that's one of the things they're trying to do by making it accessible to all, is that if I use the example of a dollar, like whether it's an American dollar or Canadian dollar, it's divided into 100 because it takes 100 cents to make $1, right? With Bitcoin, it takes 100 million to get one Satoshi. Satoshi is the penny version, but for Bitcoin. And so what that means is that if you can buy one Bitcoin because of it's pretty expensive, I think as of today it was around $34,000 US. If you don't have $34,000 US, most of us don't have it just to spend like that. You can buy a fraction of a Bitcoin because it's divided into 100 million. And that is why when you go to buy a Bitcoin, you can buy 0.5 Bitcoin or you can buy 0.007 Bitcoin. And what that means is that it's accessible. It's accessible to all. So everybody has a chance to buy some and to gain value and build wealth off of it. So now for the people who ask, can you actually buy or sell anything with it? So there are major retailers like Microsoft, Overstock, and Home Depot that accept Bitcoin payments. There are retailers like Amazon and Whole Foods that accept cryptocurrencies via a third party, like Spedin and Purse.io. There's a Visa and MasterCard who have issued Bitcoin debit card that can be loaded with funds via Bitcoin. And so you can use those debit cards and go at any store that accept regular debit cards and pay your purchases with those debit cards, which is very accessible and pretty cool. The other way to gain money from your Bitcoin is to convert it to cash via a Bitcoin ATM or through an exchange. So I want to talk about this cycle next because, as you know, Bitcoin and cryptocurrencies, it's highly volatile and it is, for the most part, speculative. I'm not going to sugarcoat it. I'm not going to pretend anything otherwise. I want to be able to tell you the full picture of what it is. And the truth is, a lot of it is based on speculation. And so you will see Bitcoin go up and down. You see on the chart here, like how the price movement has changed over the last 4 years, right? And you see the surges, you see when it goes down, you see where it's trading sideways, and you see again a big surge. So there is a cycle to Bitcoin, and that's what I'm going to explain to you. We're going back to the concept of halving. So remember earlier I was mentioning that the Bitcoin miners, they get paid when they find a solution to the equation, right? And that every 4 year, that reward is slashed in half. So halving is basically after every 200,000 blocks are mined, or roughly about every 4 years, the block reward given to Bitcoin miners for processing transaction is cut in half. This cuts this cuts in half the rate at which new Bitcoin is released into circulation. You may ask yourself, why are they doing that? And this is Bitcoin's way of using a synthetic form of inflation that halves every 4 year until all Bitcoin is released and is in circulation. The halving part is significant because it marks another drop in Bitcoin supply. Therefore, it increases the price of Bitcoin. And so here we have some details and just some numbers that can give you a better understanding of when the market goes up and when the market slows down. So the first halving occurred on November 28, 2012. And at that time, Bitcoin was $12. And then on November 2013, it increased to $1,200. So after the first halving, Bitcoin went from $12 to $1,200 in about 1 year. So you see that there's a huge upside here. The second Bitcoin halving occurred in July 2016. The price at that time was $647. And on December 2017, Bitcoin's price had soared to $19,000. So again, from July 2016 to December 2017, which is about a year and a half, the price after the halving went from 647 to $19,000. And most recently, we had an halving happen last May. And at that date, the Bitcoin price was $8,000. And a year later, it soared to $63,000, $63,500,000. So you see that every time there's a halving, there's a big spur in Bitcoin's price. But I also want to draw your attention to something else. So you see here, it was saying like November 2012, it saw an increase from $12 to $1,200 as of November 13, right? And then the second halving happened on July 2016, but at that time, the price was 647. So technically, it went from $1,200 to $647. So there was a drop, right? So now we see that there's a drop within their cycle. And then it goes on to saying the most recent halving that we had in May 2020, the price of Bitcoin was 8K, but at the last halving, it was 19K. And then it closed at 63. So you see that there is a drop between those dates, between these halvings. And whenever there's a drop, when it soars back up, it really explodes. The numbers are really huge. And so we can see that there is a bear market. There's a consolidation phase. The consolidation phase is basically when the price is moving sideways. It's not going terribly up and it's not going terribly down. It's just trading sideways. And there's also a growth cycle, which is basically when the price surges. And you can see it here when you look at the chart. You can see here how the price, there's not crazy movements here, but then it starts to rise. It starts still trading sideways. Boom, it goes up. And then a little bit of consolidation as well here. And then in this period, you see that this was a bear market. It considerably dropped here as well, right? And then boom, here you see the bull run. So basically when the price is going up, this is when they're in their growth, the growth phase of their cycle. So again, this is highly speculative. You have to keep that in mind when and if you decide to use that as a vehicle investment. Also, the cycle is based on only 12 years of historical data. So it's not like the stock market where we have hundreds of years to look at. For Bitcoin, we only have 12 years. This is a new investment vehicle. And so it's to be expected that there are more changes to come. It's to be expected that what we see today, perhaps in 10 years, it will be vastly different. You have to keep that in mind. And I wanted to show you another chart. I wanted to show you Bitcoin and I wanted to show you Ethereum. I'll get into Ethereum in a bit, but this basically shows you from 2013 to 2021 how the stock, not the stock price, but the Bitcoin price has evolved. And you see here again, the ups, the downs, the consolidation, the rise, the consolidation, and here another drop. And it's the same thing with Ethereum. Because Bitcoin is the major player in this market, whatever happens to Bitcoin often influences the other cryptocurrencies on the market. So now that you know what Bitcoin is, it's time to talk about the other coins within that world. And so I want to talk to you about altcoins. I want to talk about stable coin, smart contract, and NFTs. NFTs has gained a lot of popularity in the last couple of months, so you may have heard a little bit of that, but I want to get into the other possibilities when you're looking into the crypto world. So Bitcoin is it's basically the OG. It's the first iteration of a cryptocurrency, and it's the benchmark for the development of other coins. All other cryptocurrencies other than Bitcoin are called altcoins. So if you hear that word, if you start doing your research and if you start getting into that world, you hear altcoins, altcoins, just know that it's any other cryptocurrency that's not Bitcoin. Currently, there exists more than 10,000 altcoins on the market. And an example I could give you is there's Litecoin and there's Ripple. And there's, like I said, thousands of others, but I just wanted to give you some examples so that if you go and you want to do some more research on your own, you have some base to start from. We have stable coins. A stable coin is a class of cryptocurrency that are usually pegged to another asset with a stable value. They're used by investors seeking less volatility. So even in this asset class, you will find that there is something for everyone. If you don't want the volatility of Bitcoin or Ethereum, and if you want to participate in this decentralized system, but you don't want to have a heart attack every few months, stablecoin could be an option for you because it's not as volatile. A lot of them are pegged to the currency of a country. For example, the USD coin is basically the US dollar. It's mostly trading around $1. It rarely goes higher than that or way lower than this. And so for somebody that still wants to partake in this but wants to be safe, be more prudent, stablecoin could be an option for you. The other cool thing with stable coins is that you can stake them. And I'm not going to get into staking in great details because we have limited time, but basically a good comparison I could give you is that you could basically have a savings account with interest, right? That would be the comparison I would do with staking a stable coin. Basically, you could put your stable coin in an account and it draws interest like 12%. And so there's a lot of things you could do with these things. But as always, I deeply encourage you to do your research and to really find out, as it is pegged to another asset, what asset is it pegged with, right? To make sure that you make the right decision for yourself. And then there's smart contracts. Smart contracts are programs stored on a blockchain that execute the terms of a contract. So it could be any types of contract. It could be a financial contract where you loan money to somebody or you borrow money from somebody. It could be a contract where you are in charge of a supply chain, and so you detail all the areas that comes with having a supply chain. It could be art, it could be whatever you want, but basically they're programs that are stored on a blockchain, and these are called smart contracts. Smart contracts for now are mostly on Ethereum. And that is why after Bitcoin, the second OG would be Ethereum. Most coins are based on that blockchain, but it is not the only one. There are other new projects out there that are building their platforms so that people can build smart contracts on their platforms as well. And so I put Cardano as in there as an example, but know that there are other ones besides those two. And then we have NFTs. So NFTs are non-fungible tokens that can be used to represent ownership of unique items such as art, collectibles, even real estate. They're secured by the Ethereum blockchain, and you can buy them on OpenSea, Mintable, and Rarible. NFTs, there's been a lot of success stories about NFTs, from people selling sports cars to people selling their art, or creative basically selling their contents in there. And some of them have gone from hundreds of thousands to $1 million. So this is definitely something worthy of having a look at. And if ever you're interested and it fits your investor style, it's something that you could potentially add to your roster. So now that you know what Bitcoin is and you know that there are other cryptocurrencies out there, you may ask yourself, how do I buy into this? And so, just like the stock market, you can buy Bitcoin and altcoin on an exchange. But unlike the traditional stock market that's open from 9:30 to 4, crypto exchanges are open 24/7. Remember that it is decentralized and there are perks to that. And so if ever you wake up in the middle of the night and you have an itch, you can literally buy some Ethereum from the comfort of your bed on your phone. You can buy on an exchange with fiat money or with altcoins. So you can buy a cryptocurrency with like money, like Canadian money, or if ever you have some coins in your account, you can buy, let's say, Cardano, which is ADA, that's the name of their coin. You can buy it with some Bitcoin that you have. As it is still decentralized, the process to start trading cryptocurrencies is relatively fast and easy. It's also much more riskier as their exchanges can get hacked, they can go offline, or they can go out of business where you could lose all your money. So, starting your account to build your portfolio of cryptocurrencies is fairly easy because it is a decentralized system. I remember when I started my first account, it took me less than 30 minutes and I was ready to go. I was ready to transfer my money and buy some coins, right? However, we have to highlight that it is a riskier exchange because everything is online. Anything that's online can be hacked. And I'm going to show you in the next slide, two of the major corrections that Bitcoin had were due to two exchanges getting hacked. And when they got hacked, their money got hacked. So people, the hackers left with the money of the people. And for some, they were able to retrieve a portion, but still not all of it. And so you have to keep that in mind. You have to keep in mind that there is a risk to this. A solution to that risk is to move your funds to a wallet. There are hot wallets, there are cold wallets. I'm going to get into that in a bit, but just know that yes, there's a big risk, but there is a solution to this. For the exchanges in Canada, we have a few that are popular and pretty much reliable, like Index, FTX, Newton, CoinSquare, amongst others. And for international exchanges, we have Coinbase, Binance, Crypto.com, amongst others. Please note that there are way more than that exchanges on the market. You may meet somebody and they tell you they actually have 5 to 10 apps on their phone to buy cryptocurrencies. And the reason why is that each exchange have a set of coins that they're offering, right? And so what Newton has to offer me in terms of crypto assets is different than what Index has to offer me, and it's different than what crypto.com is offering me. And so, depending on the coin or the Bitcoin that you want to have, if one exchange doesn't have it, you're most likely going to seek another exchange. And so just keep that in mind. Each exchange have their own fees and their own insurance policies. So there is a fee if ever you are transferring your money from one exchange to another, or if um, you're buying like an altcoin with another altcoin, there are fees involved, but they depend on the exchange. And so it's important that you look into that when you're looking at which exchange you want to put your money in. Each platform has its own range of tradable assets, and you can also transfer your cryptocurrencies from one platform to the next. I want to say, if it's possible, if you have your phone handy, I would take a picture of this slide and another slide that's coming up in a bit, just to get a basic, how could I say, a foot in, right? Because I'm not going to lie to you, it's quite complicated. It can be very complicated. And so here you have a few example of exchanges, whether it's Canadian, whether it's international, that you can look into. And when you're looking into them, you'll find out the other exchanges that are out there. But if you're completely green and you have no idea like what exchange to use, it can be a tedious task to pick the right one for you. So I encourage you to look into them and read what each one has to offer in terms of crypto assets and in terms of fees, and check if it fits your profile, if it fits what you are looking for. On the next slide, I'm going to show you the Bitcoin's historical correction. So you may have heard the Bitcoin crash in the past couple of weeks because of it started with Elon Musk and the tweet that he put out, because originally Elon Musk had said that he was going to accept Bitcoin payments for his cars, and then he retracted himself and he said that he wouldn't because of issues with sustainability, with energy consumption, and that crashed Bitcoin. And we have yet to see if Bitcoin is going to go back to $63,000, but it slashed that price in half. And here I wanted to show you the historical corrections of Bitcoin. So generally, when you look at these numbers here, you can see that the correction usually is in the 30%, 30, 35% up to 40% on a regular basis. However, whenever there's been big dips, like here you see minus 82%, it explains to you here that there was a Ponzi scheme known as the Bitcoin Savings and Trust. And the fraudster was later sentenced to 18 months in jail and 2.4 million in damages. So basically, this one is for the 56% drop. There are scammers. Bitcoin is not a scam, but there are scammers that try to profit from it because it is online, and you can easily message people and tell them, hey, I know Bitcoin, I can do this for you. Just give me your money and I'll invest it for you. And unfortunately, there are people who believe these people and they fall for it and they get scammed. And that's why Bitcoin kind of has this reputation that, oh, is it a scam or is it actual legit a legit investment? Here you have the 86.9 drop, and this is because a Bitcoin exchange was hacked. So that, and it eventually led to bankruptcy. And that is one of the biggest, if not the biggest, correction that Bitcoin experienced. There was another hack, and that was a 530 million hack of Japan's largest OTC crypto exchange, CoinCheck. Again, when these hacks happen, these are exchanges, these are online exchanges that get hacked. Hence why it's important to think about a solution to this, which is to store your Bitcoin in a place that is safe. That way, no matter what happens with these exchanges, your money is safe. And then the latest drop that we experienced was the one with Elon Musk. I don't believe that we have dropped to 83%. It's nowhere near the other drops of the past. However, it was still significant. And because financial institutions are now interested in Bitcoin, they're making moves with Bitcoins, they're taking positions with it, it's talked about much more in the news. And so when it dropped, it created kind of a frenzy because now it's something that's talked about in the open. It's not something that just a few people on the ground know about. So just to keep this in mind. So if you're curious about what cryptocurrency to buy and how to do your research on them, like how to do your due diligence on a cryptocurrency, this is where I explain how to do that. Again, I would encourage you to take a picture with your phone or a screen cap of this slide, as it will be helpful to you in the future, and it could be a good base as you expand your research on cryptocurrency. So let's say that you're like, you know what, I heard about VeChain. You know, it's in the top 20 cryptocurrencies in the market right now, and I'm curious as to what they do. How do I find out that information? Well, to start, you have to check their white paper. And the white paper is basically the report that the founders and the developers of that coin have put out there to explain their purpose. It explains the uses of their platform. It explains the solution that they're providing, and they also show you the roadmap that they have. So most altcoins, well, to know if an altcoin is viable or if it's a good idea to invest in long term, the coin has to serve a purpose. And you will know what purpose it serves when you read the white paper. Not all coins in the crypto market today serves the purpose. So you may have heard about meme stocks, not meme stocks, you may have heard about meme coins. And so some of these meme coins, they're pegged that way because they don't actually have a purpose. They're just here and people use them for pump and dump. So they pump the stock, they take their money, they leave, right? So you have to know which one is an actual legitimate project that you believe in and that you can invest in versus the ones that don't really truly have a purpose. Therefore their trajectory is very speculative, right? Because you don't really know, if you don't know what you stand, and you don't know where it's going to go. Another report you can look at is the yellow paper. It's a more technical version of the white paper. It presents the scientific details of the technology. And then you have the beige paper, which basically reformats the yellow paper into a more organized and easy to read summary. You also have informational platforms like CoinMarketCap, CoinGecko, and Masari. And those platforms provide data on crypto assets, exchanges, NFTs, etc. What's really cool about these platforms like CoinMarketCap, CoinGecko, and Masari is that they also come in apps. So you can actually download them as apps on your phone, and you can check them regularly on your downtime or when you're doing your research. What I love about them is that they provide a lot of information. CoinMarketCap actually has a section within their website where it is for education purposes. So they break down the concepts of Bitcoin. They break down some coins even, and they tell you what they're here for, what's the forecast on this Bitcoin? How many people actually believe in it? Is it feasible? Or is this backed by actual companies? And the educational section of CoinMarketCap really goes in. They share articles, they share news. So it's a pretty wholesome website to gain all types of information about the crypto world. Same thing with CoinGecko. I really like their platform. I usually get my news from them. And Mistari, I love Mistari as an app. Is the app that I use the most when I want to know how the market is doing today. Mistari, the other good thing about what they do is that they classify each altcoins or each crypto assets, if I could call it that way. So if ever you're looking into the gaming altcoins, you will see it. If you're looking into DeFi altcoins, there's a category for that. If you're looking for more artsy altcoins, there's a category for that. And so depending on what you like and what you're comfortable with, you can do your research on that. The other cool thing about all three of these platforms is that they give you direct links to the white paper. They give you direct links to the white paper. They give you direct links to the social media of each coin and their developers. And from there, you can see, if you're looking at the roadmap of a coin, you can look at it and you can really have a wholesome picture of what that altcoin is out here to do. So earlier I mentioned wallets, and they're pretty an important part of owning crypto assets. There's two types of wallet. There's hot wallet, there's cold wallet. The difference between the two is that one is stored online, which is the hot wallet, and one is stored in the physical it's in a physical storage, which is the cold wallet. So a hot wallet is online storage for your digital currency and was introduced along with the launch of Bitcoin. Exchange wallets are typically hot wallets. So where you keep your money when you buy your assets, your crypto assets, they usually come with hot wallets. Most common types of crypto wallets, because they are simple to set up and easy to use, and hot wallets are meant for everyday cryptocurrency users. So if you are someone that trades daily, weekly, hot wallet is a good alternative for you. Cold wallet, on the other end, is basically designed for the physical storage of a cryptocurrency. It usually looks like a USB key. Cold wallets are considered the more secure cryptocurrency storage solution as they are not connected to the internet. As they're not connected to the internet, they have less chances of being hacked. To store crypto in your cold wallet, you send it from a hot wallet to your hardware wallet's public address. So basically, let's say that you have your money in crypto.com and the exchange that's called crypto.com, and you're like, okay, you know what? I want to move my money to a cold wallet. You basically just use the wallet link and you link it to the cold storage. That's how you can transfer from a hot wallet to a cold wallet. The main drawback is that they are impractical for everyday crypto usage, as it is more cumbersome to send crypto from a cold wallet. So if you plan on trading daily or weekly, then it may be not as easy to use or as easy to do so through a cold wallet as it is from a hot wallet. So you have to take into consideration how much money you have stored, right? Some people, their threshold is 1,000. As the minute they reach 1,000, they transfer to a cold wallet. Some people, it's $5,000. It doesn't matter. It's really about your level of comfortability with how much money you have that could potentially be hacked if left online. So this actually closes the presentation on cryptocurrencies. If you guys have any questions, I'm going to look at them right now. Let me just open this thing. Hmm. Oh, Okay, I see there's no question. I forgot to tell you guys to feel free to ask any questions in the chat along the way as I do the presentation. There's no stupid questions. There's no question that cannot be asked. We're all here to learn. So if you have any questions, whether it's about the exchanges, whether it's about the altcoins or about the wallets, the fees, feel free to ask them or to unmute yourself and to ask them directly.
Hi, this is Joanne. I
Hi,
just wanted to
Juan.
know. Hi, Han.
Hey.
Maybe this is for Fat. I just wanted to know how long are going to the presentations are. How long are they going to be on the website?
I will post them this week, end of this week, or worst case next week. There is already the first 3 workshops on the website. Let me put in the chat. But I can, yeah, for sure I can do it this week.
No, I mean, I know, I've seen the other ones, but how long are you going to leave them for?
Oh, there is no, I won't say forever, but they're gonna stay there.
For a minute, okay.
No.
Perfect. Thank you. Thank you so
You're
much.
welcome. My pleasure.
And thank you so much, Cassie. You've been amazing. Thank you.
Yeah.
Thank you. I don't fully believe that nobody has any questions about crypto. It is, I'm not going to lie, like when I first started getting to it, it's not the most, like it's not easy to get a comprehensive understanding of what crypto is. Like you have to use a lot of websites, you have to do a lot of research, you kind of have to do trials and errors. When I started to buy crypto, that's when I realized that each exchange offers different crypto assets. And at the time, I was, oh, honestly, I'm lost. It's over my head. What do you mean? What part went over your head? If I could bring clarification, I'll be glad to do so. Whether it's okay. Is it about like what Bitcoin is and like the purpose of it, or is it more so like I think I need something really basic? Okay. Well, my goal here was to explain it to you in the most basic way because I find that the seminars that I've attended, even in the research that I did, a lot of people don't really get into the nitty gritty of things and explain in a way that everybody could understand and everybody could just answer, what is Bitcoin? Oh, Bitcoin is this. But if you want something more basic, is it more so you're on this? Like, I would love to know what, if you have like a specific question, I could try to answer it better than like a broad statement. You can unmute yourself if ever it's easier to ask.
Hi, sorry, Arlene here. Yeah, no, just everything is a little bit over my head. So I think I just need to do more Google and just kind of get a better sense. It's nothing to do with your presentation. It's just a lot of information that's all new to me. So just need to really take it in. Maybe I'll just go back with the recording and see if that helps me a little bit.
Okay. Okay, great. Do the altcoins also go through the halving and mining process? No, I don't believe the altcoins go through it. But the thing with Bitcoin is because it's the benchmark, it affects the rest of the market. So the cycle of the Bitcoin will also match the cycle of the altcoins. The difference though is proof of work. So remember I said Bitcoin, you have to, there's like a mathematical problem that you have to solve. When you solve it, you get paid with the Bitcoin. That's called proof of work. There's another system called proof of stake. And I find oftentimes whenever the market goes up and down, the altcoins that are based with a proof of stake system, their prices don't drop as much. Their prices don't get as volatile as Bitcoin or Ethereum. So that's a really good question, and that's one way I find that demarks the volatility for from one group to the next. But technically, it's Bitcoin. But because it's the number one, it's the giant of the space, it's the precursor of everything. The market generally follows what happens with Bitcoin. And it's the same way when Bitcoin goes really down, whenever it goes back up, all of the market goes back up. So the growth cycle is affects all the cryptocurrencies, and the bear market, the bear cycle affects all of the cryptocurrencies as well. Okay, well, if there isn't any more questions, I just want to say thank you to everyone for joining, especially the ones that have joined week after week. I deeply appreciate it. And I hope you learn a lot from these presentations. Why is there such a high number of coins? Because people are because of new projects, if ever they're most of the good coins are here to solve a problem, right? That's why when you read their white paper, you see what the developers are trying to do, you see what they're trying to achieve, and they provide like the roadmap, they provide what they're trying to do, how long they believe it's going to take, and who they're going to serve. There's one I'm giving it just as an example. It's called VChain, and it focuses on the supply chain demand, and they already have as clients they have BMW, they have Walmart, and other big names that we know of. And so when you do your due diligence and you find that some of these coins have like a whole project that it's sustainable, that it it helps people in their everyday lives and it helps the businesses, then you know that you're in a better position than other coins. So coins are created every day, but not all coins are created equal. So it's important to do your research to know if wherever you're putting your money, it's gonna grow, or if where you're putting money, it may grow for a hot second, but it may go away the next day. So I would encourage you guys to really look into each and not just go off of the hype, because there's a lot of hype with certain coins. I'm sure you heard about Dogecoin. Do some have a lower entry point than Bitcoin? Absolutely. Bitcoin, I think as of today is around 34,000 US. But don't forget, Bitcoin, you can buy a fraction of Bitcoin. That's one of the beauty that it offers, right? But there's other, like Ethereum is about 2,200 today, if I remember. But there's also like altcoins that are $1. Like Cardano is $1 something. Polygon is about $1 something. VChain is 10 cents, I think. Um, if you want to go into stable coins, those are $1 as well. How often do you check your crypto? How often do you check the news? I am a long-term investor, and therefore I don't that's me. I don't feel the need to invest to check every day my portfolio, because I know for me, with my strategy, I know I'm going to see the rise in the next couple of years. So because I don't trade daily, I don't feel the need to check every day. However, I do inform myself with the news. I do inform myself with the news because there's a lot of things happening right now. The fact that El Salvador made Bitcoin a legal tender, it's a huge news. Like this could change a lot of things, because they're the first one, but Paraguay is looking into that. They're looking into making Bitcoin a legal tender too. And so, what if more countries pick that up? How is that going to affect our economy? How is that going to affect our investments? And so, I do keep up with the news on a daily basis, because it gives me a not a forecast, but it gives me like a glimpse of the possibilities that where this could go. And I'm very for countries that are considered third world countries to really get into cryptocurrencies and for the people there to have access to it, because when you are in a country where the government is not stable, well, so is your money, so is your job, right? And so if you have an investment vehicle that can bring um, something that's more plausible for everybody to be on the same line, to start the same way, I'm here for it.
Cassie, I have a question. I see like platforms like Wealth Simple that have now a platform to trade or purchase crypto. Um, do you know by any chance if they offer like the wallet services as well to save the money or I mean the coins? Um, could could you
Yeah.
shed a little bit more light?
So the thing with Wealth Simple offering crypto is that it is basically acting, how could I say, when you buy crypto on Wealth Simple, you don't own the crypto. So I haven't used it, therefore I don't know if you can actually transfer from Wealth Simple Trade to like a cold wallet. But what I do know is that the crypto you buy on Wealth Simple, you don't own. And some people might be like, oh, it doesn't matter because I can still make money off of it. And you can still make money off of it, right? But you have more possibilities when you own your own crypto. And one way for me to explain it is, a good example is, I mentioned stablecoin and I mentioned staking your stablecoin, which is basically putting your stablecoin in an account that will hold it and pay you interest on it, same way that a savings accounts work. You cannot do that with Wealth Simple because you don't own it. But if you own your crypto or your crypto assets in whatever platform, whatever exchanges that you have the option to use those coins and make it work for you in multiple ways. Also, I think it would be worthy to check, can you transfer your crypto assets from Wealthsimple to a debit card? You know, because that's one way that you can use crypto assets for your everyday usage. For with other exchanges, they give you that option, because if you own that crypto, you do whatever you want. So if you want to stick with it, if you want to leave it there, or if you want to transfer it to a debit card or a credit card, you can do so. And so I'm not sure that Wealth Simple Trade, you have these options available through their platform, but I would definitely do some research. But what I do know for sure is that you don't own the crypto on Wealth Simple Trade.
Yeah, that's valuable to know.
Yeah. Okay. Well, thank you everyone for your questions. If ever, do you have any tricks for beginners to avoid falling into pumps and dumps? My advice is honestly, do your research. So I mentioned earlier there are like the meme coins. Some people call them the shit coins. Those are more likely to experience pumps and dumps. When you do your research on these coins, you see that they're not really adding anything valuable to the market. Whereas if you look at, like, let's say Cardano or even Ethereum, you know, when you do your research on them, you're like, okay, no, this is tangible changes that these coins are developing, that these coins are permitting to happen. This is actual tangible money that's backed by something. And so coins like these are not as likely to be pumped and dumped. They're not as likely to go like a surge of, like, you know, like Dogecoin went how high, right? Dogecoin went really, really far, and Dogecoin would be considered a shitcoin originally, but as Dogecoin has been progressing, they're trying to give it usage. They're trying to make sure that they're trying to add value to Dogecoin. And so, what's his name? Cuban, forget his whole name. Mark Cuban has added the option for people to buy merchandise for his sports team with Dogecoin. So little by little, people are adding value to Dogecoin. So now Dogecoin is starting to be a coin that has value, that has tangible value. But I would say that that's the best way to avoid it. Like, pick coins that actually have a development, that they actually have a roadmap, they actually have a plan ahead of them, versus the ones that are like, we just like dogs, like those are not the ones that you want to look into.
Cassie, you mentioned that some coins have like a purpose behind them.
Mhm.
What do you mean by that? I mean, other than the fiat coins that have a purpose, what are the main
Mhm.
purposes for the Bitcoin and the Alta coins, if that makes sense?
So a good one I'll use to explain this is VeChain. And this is not me advising anyone to buy VeChain, but it is me encouraging everyone to look into VeChain and to understand what their offering is. So basically, VeChain, their developers are focusing on the supply chain. So with their blockchain, they want to show the product evolution from inception to when it goes into someone's final hands until we have the final product. So you see who is developing the product, where is it being developed? Okay, next stage, it's at this factory. Okay, next stage, it's arriving to this company. Next stage, the product is ready for sale. And then final stage, the product has been sold. And so this is what I mean by a tangible plan. It's like, okay, what they're trying to do is they're trying to help companies that have products make sure that nothing is left behind. Because when you work in supply chain, sometimes things go amiss. Sometimes reports are not done properly, and then you don't know where that batch went. Oh, that batch is stolen. It's somewhere in China when it should be in Canada, right? When you store that data of where every part of the process is, when you store it on the blockchain, and remember, the blockchain is like a ledger of transactions. So everything is stored on that, or every transaction is stored on that blockchain. It cannot be amended, it cannot be deleted. And so you have concrete evidence, if I could use that word, you have concrete proof of what's going on throughout the cycle of merchandising this product, right? And VeChain, I mentioned before, they're backed by Walmart, China, BMW, but they're also backed by the government of China. And they're backed by a lot of like companies that you may recognize when you look at the list of their clients. And so these are people that trust and believe that by using the supply chain blockchain that VeChain is offering, they're going to benefit their line of business. So to me, this is an example of a tangible plan. This is a coin that this is a company that's doing something, it's going somewhere, it is being utilized by companies that we know of, and companies that we know of and we trust. And so that proves to me that this is a good project. So that's one way I would um that's one way I would explain how I find a coin or a company that is doing something tangible, something that is valuable to businesses and consumers. Awesome. So there are a lot of them out there. I would say if you want to start your research, check out the top 20 crypto assets. If you go on Coin Market Cap or Misari, you can look at the top 20 crypto and maybe pick one. and check out their white paper. Go on CoinMarketCap, see what the articles are saying about them. Do a Google search, check out some forums if you want. But I would say that's the best way for you to see what is the utility of this coin. And if the coin has no utility, I would say be wary of it. Have a strategy for it, because there are people who pump and dump. There are people who know that this is a bad coin, but I'm just gonna put a lot. I'm gonna make a lot of money. I'm gonna leave it there, right? So people are making strategies off of coins that have no tangible plan or have no plan, but there are other coins that have plans. And now that financial institutions are entering these spaces, the financial institutions are looking into the coins that have an actual plan to back up. So at the moment, financial institutions are really reeling into Ethereum, right? The next one after that is Cardano. They're really gonna go in on it because they're already gone in with Bitcoin, but up next on their schedule is Cardano. It's Ethereum and Cardano. So it's yet to see how that's going to evolve, but it will definitely influence the price of them.
Do you have any questions?
Well, thank you for the questions. They were really good questions.
Yeah.
And the same way with the other workshop, this is meant as a presentation to encourage you to do more research. I'm hoping that not just this one, but all the other workshops, it's just to get your feet wet. It's just for you to understand that there is a way for you to grow your money. And it's just about deciding what is the best way for you to do so. But what's important for me is that you know that it is out there and it is a possibility, but you do have to do some more research. So I'm just hoping that this could be a stepping stone for you to go out there, spend some time, do your due diligence, do your research, find what's best for you, and grow your money. Thank you. It's been my pleasure. And thank you, Afropolitan, once again for using your platform the way that you do to bring financial literacy to our communities. It's extremely important, and the information is out there and it's for us to take. So really awesome. If anybody has missed the other workshops, or if you know other people that want to catch up on what we presented before, definitely direct them to the website where they can watch the playback.
Let me put it. Thank you so much, Cassie. We really appreciate it. Thank you very much for your time. I hope this workshop helped you to get all of the information you were looking for. Thank you so much again. And yes, tomorrow we have another workshop, but in French with Faiza Abdallawi about personal finances. If you're interested, you can just register. And yes, so thank you again. Thank you, Cassie. Have a nice evening and see you soon.
Thank you all. Have a good night.
Thank you. Bye-bye.